Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours. We saw equity markets weaker yesterday, continuing from the weakness which was posted on Wednesday as well. We saw bond market moving nowhere, sideways movement both in the gilts market and also in 10-year US Treasury. We saw a dollar continue to give back its gains which were from 2022. So dollar softer again. We saw some gains in gold prices and oil prices as well, as there is a demand fear coming out from China reopening as well. Elsewhere, we saw Asian stocks also finishing lower, though we have some positive movements in certain parts of the Asian markets. But European markets were overall weak yesterday. What was the driver behind these moves? There was some noise and some news from speakers from the central banks across the Federal Reserves in the US also. We saw some European central banks speaking about maintaining their hawkish stance overall. So all that has fed into weakness in risk assets overall. We saw, if you focus on earnings season, we saw Procter & Gamble, the household names also producing some lackluster returns yesterday. So the Q4 earnings were in line with expectation, but markets were expecting a much firmer guidance for 2023, which came in a bit lighter than expected. Another household name, Netflix, reported yesterday, although earnings were disappointing, but market looked over that earnings disappointment as the company was able to add much higher new user base. Almost 7.7 million new users were added in the quarter, which was much ahead of what market was expecting. Market was expecting around 4 million new users in the fourth quarter. But shifting away from those news, some good news here in the UK. We saw the reports from Cornwall Insight, the energy agency, reporting yesterday that households, the struggling households, can have some cheer from expect their energy prices bills to come down markedly, if to around 2,200 per year by July. For the rest of the year, if we focus on what report said, excluding government subsidies, the typical household would have been expected their bills to rise up to almost over 4,300 pounds per year from April onwards, but this will come down to around 3,200 from April. So there's a marked drop in energy prices cap consumer can expect in the coming days. This will, including all the rebates and all the supports from the government, and a typical household can expect around $2,200 a year cap on the energy bills, which is much lighter than what people are expecting. Again, this also helps government reduce their subsidy burden, so it's also good for government borrowing, which means that there could be a positive momentum in the bond market as well. This morning we saw some softer numbers on the retail sales. Retail sales fell by 1% in December. This was on the back of weaker online sales. That coincidentally fell with the volumes in online were dropped by the retail Royal Mail strike incidentally in the month of December. So there is some noise coming from that side. But also we saw non-food store and store sales, food store sales also dropping from month of November. And that is largely back on consumers cutting back on their spending given the inflationary pressures they've been feeling elsewhere. But as I alluded earlier, the welcome relief on the energy prices, which could feed into a much better spending purchase from consumers down the line. We also expect those inflationary pressures easing for the rest of the year as well, as Bank of England Governor Bailey also reiterated yesterday that bulk of the energy inflationary pressures have probably eased somewhat. So we expect those disinflationary and softer prices to to boost the consumer demand and consumer spending in coming months. What else this rest of the day? There's not much data coming out as a week calendar for today, but as always, we'll keep you posted on any news and developments. But for now, we'll leave it there, and thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.